So next thing I want to dig into in this episode is actually going like, well, how do you think about this in reports? Like, where do you actually start with it? So, Matt, if you have someone coming in and let's say they've never had reports or good reports before, like, how do you think about like unpacking this topic, because it is such an important one?
The best place to start is what's your goals. If you don't know, if as a bookkeeper we don't know what our clients' goals are, we can't help them reach their goals. It's that simple. So we need to know what you're trying to do, what you're trying to achieve, and how you're trying to get there. Let's say the example, I want to save $100,000 in 12 months. Okay, cool. We break that into monthly goals, weekly goals, whatever it is, however much we're reporting. Simple as that. So we can then go, okay, you need to let's say it's $120,000, $12,000, $10,000 a month. So therefore, you got to save $2,500 a week. Easy. But where does that saving come from? Then we go into deeper levels like that. But to keep it simple, the simple reporting for that would be, what is our saving line? So we've got our future savings report, like as in the line on the item on the report. And if it says at the end of the month it's anything less than $10,000, you're off track. But then
curiously, has any business owner ever come to you and gone like, hey, here's my goals. I want this reflected on my reports to help me keep on track?
No. Wow. I'm honest, but it's our job. It's my job as a bookkeeper and as a report producer to go, you need the information to be able to set your goals or, to track your goals. That's the biggest thing. It's about tracking. I can go, hey guys, you need to take that $2,500 a month and it has to be $177 a day. So I can give you a report every day to save you $177 or whatever it is. It's like that's, but
quick maths. It's good.
Yeah, it was not very good maths.
That was awesome.
But, I can do that on a daily basis and give you a snapshot every day and go, here it is. But that's not going to help you. And then depending on your business, well, my business is fluctuating. Like, my December and January are pathetic. Like we have no cash. So I've got to make sure they've got cash in the bank. So we have no income. So therefore it's okay.
Can you explain that, Matt? Can you go deeper on that? Because I think this is another one that catches people. And I'll use an example here. Actually, no, use your own business as an example. Explain, because I know it a little bit, but the audience won't.
Yeah. So my business is auditing. So I'm an auditor by trade. Been doing it for 20 years. Love what I do. I'm crazy, I know, but that's right. That's what I. That's why I do what I do. But like I know that in December and January, I'm going to have probably less than 3% of my total income for the year in that period. So it's about 2.8%. So, and I still have exact same expenses every month. Fixed costs don't change every month. My wages don't change every month. So therefore, I know that by the 30th of November, I've got to have X amount in the bank to cover my costs till the end of February. And so if I'm then taking back to reporting, if I'm trying to save that, I've got to add that on top. So I've got to make sure that I've got, my X amount plus $30,000 to save my $10,000 a month. Now, if I don't know that, if my report doesn't tell me that I've got it there, well, then what's the use of having a report?
Yeah, so seasonality is a great one there. Grant, jump in. I know you're on this one.
I'm sitting there, I'm like, oh my gosh, there's so much curse knowledge here. Because I love this point, because it's a second point that people might not understand on this concept of goals, right, which is the seasonality. And there are two things that I'm going to try and simplify this: seasonality on expenses and seasonality on income. Right now, if you're an e-commerce store, your income is going to be loaded up towards Christmas. Or if you're a store doing Valentine's Day cards, well, your February is going to be packed.
I would love to see a florist's books for Valentine's Day.
I have seen a florist's books, by the way, Charlie. Yes.
But you've got another layer in that though, right? Because it's like if your income's coming here, don't you have to buy the stock?
Dude, exactly. So I actually know florists, and the cash that they save over 3 months leading up to a Valentine's Day is ridiculous. You're talking huge amounts of money transacted the morning of Valentine's Day, and just the amount of vans, the amount of everything that comes in. But you got to plan for that months in advance, right? Because that's a huge revenue hit. But in addition to that, from the expenses side, that's income, and you can think of heaps, right? You've got Black Fridays for e-commerce stores. You probably have financial years for software businesses or SaaSes where people are trying to get their annual income in. But on the flip side, to your point, Maddie, is your expenses and your seasonality on expenses where, great, like I know a lot of people have got a team in the Philippines where there are bonuses at Christmas. Okay, well, how are you going to start thinking about saving for that as opposed to just getting to Christmas and going, oh my gosh. And so I love the idea of you've got goals of what your outcomes are going, which is business and personal. And you've also got this kind of seasonality, I guess, is what we'll talk about it with incomes and expenses that you also need to communicate with your bookkeeper. Well, and your bookkeeper will probably be able to see it through your last 12, 24, 36 months of reporting and go, hey, like, did you know you should probably start saving now for Christmas?
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all, and you want to dive deeper into being a full stack business owner, check out the full episode by clicking the link on your screen or in the description right now.